Good evening, everyone. Good morning, good afternoon, wherever you are, and whenever you are. It's your boy Saikido. So in today's video, we're going to be talking about a lot of things, okay? And I'm going to be showing you how I actually simplify ICT concepts and actually come with like a model, you know. So these are the 6 things that I actually use, um, uh, that I'm going to be using as a model for this video, that I used as a model for this trade. Okay, so I'm going to be talking about a dealing range, and I'm going to explain to you what a dealing range is, the PDRAs, the premium and discount. Before the PDRAs, premium and discount, that's the second thing I look at. And then I look at the PDRAs at premium, identify also the PDRAs at discount, and then I look for SMTs once those PDRAs are engaged. And then I look at the change state of delivery. Sorry, yeah, change the state of delivery or market structure shift, and then I use like standard deviations for take profit. So those are the 6 things that I actually look at: dealing range, premium, discount, and then I identify the PDRAs at premium, discount. That's the third bullet. The fourth bullet is SMT, and then the fourth one is change state of delivery or market structure shift. Oh, and then the fifth one, 1, 2, 3, 4, 5, 6. The sixth one is the TP, and obviously I use standard deviations, and I incorporate that with our, I mean the draws on liquidity also incorporated, my TP. So yeah, I wanna talk about I was able to catch a trade, and also I'm gonna be showing you how to actually get like a turtle soup. Turtle soup. I'm gonna be highlighting turtle soup and some time theory. Some of the things that I use personally, but obviously I get all the information from ICT's YouTube channel, so go check it out. I simplified everything and made my model of his teachings. I'm gonna be also showing you like the power of three on this trade, because I pretty much rely on that power of three: AMD, accumulation, manipulation, and distribution. It could be on 1 minute, could be on 5, 15, could be on 1 hour. Price is actually fractal, so it actually, what it does on a weekly chart, it's the same thing on 1 minute, 1 second. That's how I'm able to get those trades on 1 minute, sometimes 15 seconds chart. I'm going to be showing you on this public YouTube, how I actually catch trades on the 15 seconds chart. And I'm actually using the same thing that I'm using. I think if you were to go to my Instagram and check the executions tab, you can see me um executing on 1 minute there, because my MT5 doesn't have 15 seconds. But yeah, so on the weekly chart, I was actually kind of leaning, I was waiting to see, because last week we closed up here on ES and NASDAQ. Now I have these two instruments because they are directly correlated, so they move the same. But I can see when the other one is much stronger than the other one. Like, look at how we were able to go all the way up and take out this high here. I was anticipating this to happen on Friday or midweek, because ES, I could see beginning of the week it failed to trade back into this fair value gap in a form of a PC. This is internal range liquidity. So we move from internal range liquidity to external range liquidity, but Nasdaq is the only one that dropped lower below this previous week's low. ES failed to take a previous week's low, so it showed strength. So Nasdaq was in this case heavier compared to ES. Already that was giving me signs that they are still bullish, because we actually closed the previous week up, displaced and closed above the other previous week's high on both asset classes. So I was pretty much leaning bullish. So this whole entire week I was entertaining buy setups, but I want to focus on the one that I actually took on Friday, because it has a lot of things that I can actually teach, on this episode. So I want to teach you guys exactly how I look at this on market. So Monday we dropped, I think a Tuesday, middle of the week. I'm not really sure. Let's go to the hourly chart quickly here on the Nasdaq. Let's check. 1 hour. Okay, I don't know. It's not applicable. Okay, I don't know why, but I don't know. Maybe my okay, I need to actually quickly sort out my signal here. I don't know what's happening. I can't change interval. Okay, let's zoom in first. 15 minutes. Okay. Yeah, so sorry about that. My software just stopped recording for some time, so we are back now. So this is the low of the week. It was on Wednesday, not Tuesday. My mistake. My bad. So yeah. But I want you guys to focus now, because we then had like we had like a dealing range to work with. We took sell side here, we took buy side here. So this becomes our dealing range because both traders are trapped. We have liquidity from both ends. We have buy side liquidity from here, and we have sell side liquidity from here. So we are trading in this range. So we need to study this range. So you measure it. Let me just do this. Okay. I already have some annotations because I don't want to make this a long video. This is sell side taken. This is buy side taken right there. So this becomes our dealing range. And remember now, on a weekly, I'm bullish, right? So at discount, I'm looking for PD arrays here that are going to push me to the premium arrays right there, okay? So you can see that on this day when we made the low of the week here, this piece actually gave supported price, and it's the CE that did the job. The CE that did the job. It actually did an amazing job. Which price we saw a rejection of lower prices right at the CE of that PC, right? The PC is on 4 hour. Okay. The PC is on 4 hour. So this is where we made the low of the week. And already you could see that we had created something that I call the change in state of delivery, closing above these down consecutive down close candles on 4 hour. That actually took sell side here, so we closed above those candles. So already there, a buy side delivery program was activated, okay, in the market. So any move lower will be a retracement now, no longer a reversal and say maybe it's reversing. No, it's a retracement. I'm viewing that as a retracement. Let me just put this on the right so you guys can see how the PC, and the level of precision, if you're using ICT concepts, you can clearly see, and you can just tell that no man, this can't be buying and selling pressure. Let's just get the numbers right there. Let me just do this. I'm going to use the fibs from this candle's high to this candle's low here. Then I'll extend those out. I can screenshot the settings here. I'll just take out these ones here because I'm just measuring the CE of that, extend them out. Now I want to get the price level of this CE. So I'm just going to go here and say prices, and it's giving me 19.6189, right? So I want to get the low of this candle right here. So the low comes in at 19615.9. This is 19618.9. This is 615.9. Okay, just a few ticks short, but on this time frame, you clearly see eight as like, it's like two ticks short, so it's almost like the exact number. So this just goes to show that there is an algorithm, and you can't this can't be buying and selling pressure. The precision is too fucking, like, it's too, I don't know, like, it's too accurate, man. Like, can't be buying and selling pressure, honestly, no, man. And what I normally focus on, this is where I'm like focusing on the this is how I actually incorporate my time theory. I look at what time was the premium area that I'm looking to trade into created. So I just look at this fair value gap. I look, okay, 6. And then if I'm going to be trading the New York AM and you haven't engaged it, I'm going to look at the candles that form the fair value gap. So this one was created exactly at 10. So the fair value gap was created at 10 because this third candle that forms the fair value gap was created at 10. So that's why in my annotations, I specify the 10 a.m. for our CB high, 10 a.m. for our CB low, because this is the fair value gap I'm looking to trade into. Now I'm going to show you exactly on what day did I actually get that trade. So it was on Friday, right? So Friday we opened with we left a new day opening gap right there, new day opening gap, and then we went higher. We had news events, a couple of news events. I think we had news events at 8. So this is the time where you want to write things down. Okay, so let's go to 2 minutes. And if you have news events, because you normally, if you're going to be trading the New York AM session, you know that there is an easy equities open at 9:30, right? So if there is an easy equities at 9:30, um what you do, because you start looking, or start analyzing the New York AM for indices starts at 8:30 to 11 o'clock. That's a New York AM or New York open for indices, right? And then I start looking for trades around 8:30, but I wait for 8:30 because sometimes we have news at 8:30, so I know that manipulation will take place around that time. So there will be a Judas swing, a fake move rather. Then I'll be looking to see study the lower time frames if there is a high time frame, or if there is like some sort of liquidity that was purged, and in most cases there is. So I just look for a bearish market structure shift. If we took buy side liquidity like how we did right here, because they were in use at 8:30, look for a bearish market structure shift on a smaller time frame. Let's go to 1 minute, then boom, you just take it to the other side, and clearly you can see here went all the way up, bearish market structure shift, went all the way up again, retraced in this new dealing range now. Okay, we had a bearish order block, and then from there price went all the way down, but I was bullish, so I didn't entertain this trade, because if I'm bullish, I'm only interested in taking trades that are in alignment with my weekly bias or daily bias. So in this case we had on 15 minutes, I could see that on 15 minutes, this is Friday's trading, right? On 15 minutes prior, because this is when this was 8:30 when the news came out, I could see that price was pretty much balanced here. You could see that we traded and inside the inefficiency here. There was also a breaker here that balanced price. We went all the way up, retraced into this BC right here. We filled it completely, not once but twice, came all the way up and then went all the way up again. Now we were just feeling all the inefficiencies. You look at this one as well, filled, and also this one was filled. So the only inefficiency that was not filled after the news was this one, which was like an initial draw. I was looking at how price was going to react, yeah, because I was bullish. And already, remember, on 4 hour you could clearly see that the you could clearly see that institutional order flow is now bullish. So I'm viewing any retracement, any of those retracements, these retracements, as like, I'm viewing any sell side delivery as retracements, because we had that 4 hour chain state of delivery that I just showed you. Okay, so coming into this time frame, this is where I analyze. I check for like the new day opening gap, which was around here, and then I highlight my Asian session. I could see accumulation, then this was manipulation to this buy side, and we hit the bullish order block, couple that with my standard deviations, you get a turtle soup entry right there. You buy that, and then I studied the 1 minute. I'm gonna show you just now in a bit how I was able to catch the first change in state of delivery on 1 minute inside here. You don't need to wait for it. You can wait. You can always wait for a change, a market structure shift on a 3 minutes at least or 5 minutes. You know, to actually you be confident that you are now in alignment with I mean you know the institutional order flow, you know, because the 1 minute ones you can never really um, rely on those because sometimes it can easily be disqualified and that'll be a loss on your side. So I'm just gonna open up my annotations here because I didn't want to annotate this while I'm doing this video because it was just gonna take you know it was gonna end up being a long ass video. So normally when you are going to be trading the New York AM session or any other session, you want to study how the previous session was. Okay, so here you could clearly see that this was just accumulation pretty much, just moving in consolidation we manipulated outside that and then we distributed to the south side, and then you could clearly see that this is the 15-minute order block. So this is what I did. Now I just measured the manipulation leg on 3 minutes to get my turtle soup entry, but I waited because I could have just bought this low here when it was happening because of this manipulation leg here, the 8:30 news. I knew it's a manipulation, and already I could see on the chart that this was manipulation. I'm bullish, and I don't think it can go any lower because price it was already balanced, below. You checked 15 minutes. Let me just go back to 15 minutes and show you. Um, so let me just remove this. So the only imbalance we had was this one. We took it, we filled it, went higher, we filled this one. This is the only imbalance we had below price. So I was looking for price to actually fill this before going all the way up. So I could have just, sometimes I would just buy this fair value gap, put my stop loss below the order block here, if I'm that confident, But in this day, I was actually confident that okay, I don't think it's gonna go any lower than that. We took out Asian high. All the liquidity that was generated during that day, earlier on that day, was already engaged, and the only imbalances on 15 minutes were that one, and price was already trading inside that imbalance right here, and I could see that it was aligning perfectly with my standard deviations. That would give me turtle soup entry, a nice turtle soup entry. So let me show you how I was going to show how you can get these type of entries because people always talk about turtle soup. This is how you do it. You measure the manipulation from the opposite direction, and then you just look at the standard deviations. These are the settings. Standard deviations: -1, -2, negative, all of them, -4, -4.5, -1, -0.5, -3. You just all of these are actually standard deviations. Okay, they are all standard deviations. You just look at which one aligns with the PDRA you're looking at. So in this case, it was -1.5, right? -1.5 was aligning perfectly with the bullish order block. So it was just going to give me a turtle soup entry right there. Stop loss below the order block low because it's an order block actually that you're trading. This is just to confirm that, okay? You don't just go and put standard deviations and think you're gonna sell wherever you wanna sell. You must have a narrative in mind. I showed you that we are moving from a weekly internal range liquidity to external. So I was aiming for we didn't really have to go as far as taking out that all-time high, all-time high, I was just targeting the PDR is a premium of this. You don't really need to wait for price to actually trade to your best case terminus. So this is just going to give you an entry right to the upside. So let me show you how I was able to get this entry on 1 minute. So I got an early entry because I was already studying, and I like this because every time you are going to get a true change in state of delivery, the right one, the most powerful one, the one that's going to give you long price legs like this one, you'll see there will be a new liquidity that will be generated close to your higher time frame point of interest. And obviously here, the magnet or was this new day opening gap, so it created two relatively equal lows here, and then there was some sort of accumulation manipulation into this point of interest, which was the bullish order block, perfectly aligning well with the negative 1.5 standard deviation. And then I could see displacement, and we closed above these two consecutive down close candles, and as soon as this candle closed, I just bought that. I bought momentum right there. I'm going to show you now on my Instagram exactly that execution. Okay, sorry. So this is the these are my actually annotations on that day when I was trading. So I bought when we rallied. So, sorry, see, I just opened the position as soon as we closed above these two down close candles. I bought this shit, and then this other candle closed above this one, further confirming that okay, now we are gonna. That's why I move my stop losses. Okay, and then I always announce on my Discord, be part of the community, guys. I just took a buy on NQ. Yeah, let's take it higher. I just did that as soon as I, took this position, because I knew that there was another entry that's gonna come incoming. Um a much clear or cleaner entry was following. This was when I actually announced, took a buy on NQ. Let's take it higher, and I only had this entry at the time, and it was already at break even. I mean, my stop loss was already at break even, so I had the freedom to put another one and risk my account. And I was actually, the spread of this broker put me up there, but I was just buying as it was dropping inside that fair value gap. I put another order in, and then I had two orders running now. It was just beautiful. It was beautiful. So let's go back, and also, guys, if there is look, this is this week. Is it this week? Okay, let's go to last week, Friday, because we had news at 8:30, right? These are the news that actually the call. I'm sorry, we had news at 8:30. We had news at 9:45. We had news at 10 a.m. So these are the news that will be just. Excuse me, this is manipulation. If there are news at 8:30, or normally the manipulation comes in at 9:30 when there's an easy equities open. But if we have news at 8:30, then the manipulation occurs at 8:30. 9:30 will start the run in the direction of the bias for the day or for the week. It'll be in alignment with that bias. So if there are news at 8:30, in most cases it will be, if it's a red folder news, it will be in the opposite of the entire intended bias for the day or for the week. So that's how you know. And normally we call that a Judas swing. It's a fake move, and you study that, you see that by the weeks on 5 minutes. If you were to go to 5 minutes, you'll see how it closes. You see, this is manipulation. It closed back inside the range. It went high, it closed back inside the range. So it did not displace and close higher, no. And then 9:30 came, boom. 9:30 is in alignment with this one. Sorry, this is 9:25. 9:30 is also included on this candle. So it's in alignment with this bias. That's how you know. But most cases, this would happen at 9:30. Judas swing, bearish market structure shift, then you target the opposing liquidity. So that's how you're gonna like that thing. You should always have that in mind. Okay. So let's go back to 3 minutes where my entry was. To move this. So we had this second entry on 3 minutes, guys, and then this was after a bullish market structure shift here. We had this 3 minute BC, small accumulation, then manipulation. So now we are starting to distribute, you know, to the upside. And then this was now my initial draw, and then above this I had the 4 hour CB high at 10 from 10, and then the 4 hour CB low at 10, and then the CE. Okay, So I want to show you how you can actually trade the time theory or time PDRAs. I saw another guy. I need to give a shout out to, I don't know, some guy on Instagram. I think he also saw this thing of the time theory shit. I forget his name, man. Yeah, because he actually made me aware that, if you are gonna be trading into the time PDRAs as an ICT student also, he actually gave me this thing of us saying if we fail to actually break and violate the PDRAs that are created at the same time that we are trading on, if we respect them, it means they should act as a support or resistance. But if it's broken and we close above them, then on retest there should be support. So this is a true support and resistance in a way, you understand? So that's another form of change in state of delivery. If we break them, then that's another form of change in state of delivery. You should follow him on Instagram. I'll probably drop his link, his Instagram link in the description. Check him out. Okay, so we had that run, and then I took profits here, and I think that, yeah, I took profits somewhere around here. I also took profits at a premium of this range here. I think I used a breaker or this fair value gap. I'm not too sure, but I closed some of the profits, especially that initial entry you can see on my Discord. That, yeah, there we go. Somewhere around here, I killed the one that was in initial entry from here. Then I left this one to run. Then that was beautiful. It was running all the way up to that buy side liquidity and beyond it, and I took profits above that high right there. Yes. So, yeah, it was beautiful. Everyone is winning, and everyone is learning. So this is beautiful. And this guy actually caught the silver bullet, and he was milking it all the way down. So I just want to highlight that entry also. This was on Friday. So on Fridays, you normally expect Friday retracements, right? So if we are bullish for the week, then you expect the what we call the thank God it's Friday. Okay, silver bullet. So in turn, you'll have that retracement, and then this was a nice confirmation because we traded to the PDR that was created at 10, but we respected it. Look at how we closed. Look at how we closed exactly at the high, but the wicks do the damage, right? A little more hook. Now there was an SMT here because ES went all the way up to take our previous day's high. So this SMT tells you that Nasdaq is actually heavier. So we went all the way up, created a low, came back, broke that low, bearish market structure shift there. And then on retest, you can now use that as an inversion fair value gap entry, silver bullet entry to take it lower. And you can measure the manipulation leg and have your standard deviations. This one aligns well with the sell side that was created right there in so this -4 is close to that. So this is a draw on liquidity, a nice draw on liquidity, because you expect it to retrace for and close somewhere below midnight open for the day, because this is midnight open, guys. You must always have midnight open because it tells you when you're at premium and also when you're at discount. And if you want to be a buyer, you want to buy discount below the midnight open, and if you want to be a seller, you want to sell at premium above midnight open. So that's how I actually use this. And also the session opening, the session opening 8:30, 9:30. I always need to see, am I buying below 8:30? But I use it in the same way as I use the midnight open. If I'm buying below 8:30 open, midnight open, and 9:30, I'm buying below here, I'm extremely at discount. I don't need to have an indicator for that. I know that I'm oversold. Okay, for the session, for the day, I'm oversold. Okay, you can bring any indicator. I don't need indicators. Okay, so you can and just use that. And also this new day opening gap is still a draw for the day. That's another confluence. And yeah, so this was a beautiful trade. It covered a lot of things. Silver bullet, it covered SMT, the dealing range, it covered the change state of delivery, also the standard deviations, how you use them to take profit. You just measure the manipulation legs. and then you project your standard deviations. Look at the ones that align well with the point of interest or PDRAs that you are actually looking to trade into or looking for price to actually respect. So those are the things that I actually wanted to cover in this episode. Yeah, it's a nice one. It's a beautiful one, and I'm gonna show you how we actually had an SMT with ES right here. So this was the 4-hour CB. Let's go back to 4-hour. ES went as high as taking out the previous week's high, but Nasdaq failed to do so because we just went as far as respecting this. We did not reach for that high. So this here is SMT divergence, smart money technique. It tells you that Nasdaq is actually heavier than ES. So those are the things that I wanted to cover. The calendar, we talked about the calendar, we talked about the executions and everything. Follow me on Instagram because all my posts are educational. They are all educational. You're gonna learn something here because even on the captions, I actually tell you what I was trading. So you just go back and back test it on the charts. It's gonna give you that it's it's gonna amplify your learning curve, okay, your learning process. It's gonna just make it, it's gonna shorten it. So this is beautiful. So we took out previous all-time high, previous week's high. We made a new all-time high on ES. Nasdaq failed, so that's an SMT. So that's why that short position was actually an A plus. It was an A plus setup. It was definitely an A plus setup. So that's what I wanted to talk about today, and how you can actually use these PDRAs. And you focus on the PDRAs that are at premium of the dealing range. You look at what time of the day where they made, and then if you are trading maybe close to the same time, then you look for entries that are going to take you there. If you are trading from them, then look for any sign of respect, then you trade away from them because they are a true support or resistance. I think that's it for today, guys. I don't want to make this video a long one. Hopefully this was insightful and maybe it can teach you a thing or two. Just subscribe to my channel. I'm gonna share more of my private mentorship videos and the one-on-ones as well. If you guys like the video, that's the only way I'll know that you guys are appreciating the content that I make. And yeah, stay awesome. Cheers.